Hello, welcome to the marketplace. Coming up this afternoon, the Bank of Ghana maintains policy rate at 29% on the back of the marginal but steady decline in headline inflation to 23.2% in February.
Risks to inflation are slightly on the upside and will require close monitoring. Given these considerations, the committee decided to maintain the monetary policy rate at 29%.
Also coming up, interest rates plummet to 25.99%, the 12th consecutive week this year, as government exceeds T-bills target by 41%. Plus, Chamber of Independent Power Generators Ghana calls on Volta River Authority to immediately halt supply of 200 megawatts of power to neighboring countries. We'll hear why. My name is Daryl. Kwawu. Thanks for being with us. Details coming up. Thanks for staying with us, everyone. The Bank of Ghana has maintained its monetary policy rate at 29%. Governor of the Central Bank, Dr. Nes Addison, said the decision to maintain the policy rate was on the back of the marginal but steady decline in inflation to 23.2% in February.
Policy implementation so far has been broadly consistent with targets under the IMF ECF supported program. Although the primary fiscal balance target for 2023 was attained, the fiscal assessment is made on commitment basis. This will require vigilance to ensure that commitment control is effective in 2024. Revenue flows in the first 2 months of the year are lower vis-a-vis targets, and expenditures have been fast-paced, driven largely by clearance of arrears in the energy sector. It is expected that revenue flows will pick up in March as the deadline for filing tax returns in April approaches. After decelerating sharply in 2023, the pace of disinflation has slowed in the first 2 months of the year. Although inflation rose slightly in January 2024 and edged down in February, the latest inflation forecast suggests a slightly elevated profile from the possible upward revision in transport fares, adjustment in utility tariffs, higher export petroleum prices, and some pass-through of exchange rate depreciation. Overall, risks to inflation are slightly on the upside and will require close monitoring. Given these considerations, the committee decided to maintain the monetary policy rate at 29%.
I was Governor of the Central Bank addressing the press a while ago. Let's bring in Courage Buti, who is an economist and lead researcher at GCB Capital. Thank you so much for joining us, Courage. Wise move by the Central Bank. Can you hear me, George?
Yeah, Daryl, I think talking about the reason why the governor of the Bank of Ghana had to hold the rate at 29%. Daryl, the governor actually tried to explain that that the Bank of Ghana would always want to use the policy rate as to control or manage the spread when it comes to
the Bank of Ghana would always want to use the policy rate as a tool to control or manage the threats when it comes to inflation. Now, when they did their own outlook or forecast, they didn't see inflation as a major threat now in terms of the whole economy. And that is why they thought that they had to hold the rate for now and still monitor development on the market. And as time goes on, they will come back quickly again to actually review the rates, Daryl.
The governor has been giving us an update on the performance of the local currency as well. What has he been saying?
Well, Daryl, the argument that the governor sought to make when it comes to the city, because he kept recurring here at the MPC conference, his argument was that the fundamentals or the economic data has improved strongly. And therefore, he's expecting that going forward, the cedi will be relatively stable against the US dollar based on the reserve position, based on our capital account as well, and all these development, i.e. also with respect to the cash reserve issue as well. That could go a long way to deal with what some have argued that the excess cedi in circulation of these commercial banks are holding. And therefore, with all these things, he believes that going forward, the cedi should respond to these development, i.e. Daryl, what his uses were exactly, be relatively stable against the US dollar.
So the governor of the central bank has also announced another set of measures in the cash reserve ratio for commercial banks. According to the governor, this should help deal with excess liquidity the banks are holding. Tell us a bit more about what the central bank hopes to achieve by this measure.
Well, Daryl, interesting. You know that we were all expecting that even the first round of measures that they took, we were expecting an update on the market. But you realize that the governor sought to make some argument to support this action that if you look at the books of these commercial banks, it appears that they are holding quite a significant amount of cash. Now, these commercial banks are not lending to businesses or giving out these monies to improve what some will call financial intermediation. And therefore, the governor of the Bank of Ghana believes that this measure could cream this money that these commercial banks are holding. And they'll hold it on for them because there's also an element of these excess, Daryl, to choose my words carefully, this excess liquidity that these commercial banks are holding, feeding into FX purchase. So they believe that by upping these reserves again, it could go a long way, more of a double monetary measure to try and deal with these things on the market, which will again contribute in helping to relatively stabilize the Ghana cedi, Daryl.
What's the update on the IMF inflows and support from the International Monetary Fund?
Well, Daryl, we understand that the team should be in town in April to do their assessment. All other things being equal as well, we expect that the board will meet in May. And if things go well, we should be getting a little over $300 million from the IMF. Also, Daryl, and just to jump your questions as well, I know you'll be asking me about the cocoa bill issue. Well, the governor of the Bank of Ghana says that Cocoa Board actually has started making some payments to these individuals. And as far as he's concerned, just within the coming weeks, Daryl, we should be able to get an update, or all those who are being owed should be settled as well. Daryl, and also just to update you that I have an economist with me here, Dr. Dusako, and quickly I want to get his concerns or thoughts about the policy rate, i.e. the implications on the economy as well, and going forward, whether indeed we'll be assured that the recovery is sustainable. Doc, thank you so much for your time as well. The governor's argument about not seeing inflation as a big threat now based on the economic data, keeping the rates. I'm also saying that a marginal spike would have been perfect to try and compensate investors who might be reacting, and that could also impact on the local currency badly. What are your immediate thoughts on the policy rate maintenance as from the economist view, Doc?
Well, the business community would expect a reduction in the policy rate. An increase we don't expect. But the governor made a point that the rate of disinflation has slowed. And so it is risky to reduce the policy rate. That's point one. Point two, look at the international market, the international developments. He mentioned the tensions, the geopolitical tensions in the Middle East, which is also posing uncertainties in the disruption of supply chain. And so we are not sure of what will happen. And therefore, you don't want to put your foot forward in terms of dealing with inflation. And thirdly, you know, most central banks around the world are practicing what we call the tight monetary policies, because we know that most economies have been affected by external shocks, internal shocks, and they're now recovering. Ghana's economy is now recovering. So you don't want to push everything forward when you are so much uncertain about the developments in the issue. But there's also good news for the entrepreneurs, because even though they may be going for a higher policy rate at 29%, the governor indicated that the CRR, who, you know, is now being up for the banks who are not willing to lend. Most banks, as you mentioned, they rather want to buy government bonds, and therefore they are unwilling to lend to the private sector. So now there will be available funds to lend to the private sector. This is not like before. And so the business community should, bear with government that we are in a part of recovery. When the central bank is practicing tight monetary policy and the finance ministry is also practicing tight fiscal policy, it's going to affect growth a little bit. And so that's why they are all affected. But it's better to have 29% policy rate than to have 50% inflation rate, isn't it?
Doc, as we try and wrap up quickly on this discussion as I get back to my colleague in studio, I just also want to get your thought about the argument about the economic data sounding a little bit positive, but the trickle-down effect has taken quite long. Even let's look at the currency as well. Some are saying that if the governor is arguing that he's expecting the cedi to respond positively to the strong economic data, why the lag time and the delay that if indeed these numbers are that solid and robust, why are we seeing this impact on the cedi? Why are we not feeling the impact even on inflation going down further?
Well, if you are falling sick so much and then you're not taking pill or the medicine, it will take some time for recovery. And so I'm not sure that the governor said that everything is okay now. He has always indicated, in fact, the government, the president, the vice president, the finance ministry have always indicated that the economy is on the path of recovery. We have gone to seek an IMF bailout, a bailout which is going to last for 3 years, and the financing of it is also given to us in tranches. You don't expect everything to come back to normal within 1 year. So even based on all projections, based on the IMF data, we expect the economy to return to the pre-COVID levels after 2025. So yes, we are still on the path of recovery, but we all admit that the economy has not fully recovered. And so the trickle down, as we want lower inflation rate, a lower policy rate, a lower interest rate, a lower lending rate, all these things, we have seen the positive signals, but it's not fully recovered. We may see a full impact maybe after 2025, if we keep our discipline like this. And I'm sure with the IMF program, we will keep our discipline, the government will keep its discipline, central bank, finance ministry, everybody will keep its discipline. But what I want to add to it is that the management of the economy is not only in the hands of the BOE or in the hands of Ministry of Finance. There are also other actors in the real sector like agric and trade. And so they should all play their role so that in the end, because the fight against inflation is not only in the hands, it shouldn't be left in the hands of the BOG. The real sector must also play their part. We will know about food inflation. This is agric ministry business, So they should play their part so that in the end, we are all waiting for a fully recovered economy. Now we have not fully recovered, but we are on the path of recovery.
So Daryl, this is our coverage here from the Bank of Ghana boardroom, where a while ago the MPC announced a decision. If there are no further questions, Daryl, then maybe it could be a wrap. Or there are any other questions, Daryl?
George, we appreciate your reporting there. Thank you. We want to switch to economist Courage Botie, who joins us with his reaction to this announcement by the central bank. Courage, wise move by the central bank?
Yeah, no surprises here. Given the trajectory of inflation so far, and I have maintained that there are upside risks to inflation, I expect March 2024 inflation to increase. Could go as high as 25-26%, likely due to base effect. We've seen some depreciation between February and March, which the governor alluded to. We've seen the situation with fuel prices at the pumps going up marginally, and that is a reaction to the increase in global prices, largely from the Middle East disruptions and how it's affecting freight on the Red Sea and stuff like that. And really, that situation is not very predictable at this point because it's evolving by the day, and the implications it could have for fuel prices, exchange rate, as things are now relatively stable, yes, compared to 2022 and 2023, but by no means very stable, as the word stable will mean. And its pass through to inflation is a risk, right? Of course, there are clearly two options on the table, either to reduce to support growth or to maintain things where they are until some clarity before you make the next move. They opted for staying put, which is expected. given the dynamics we have. But they have delivered an even more impressive channel to growth or support for growth through the CRR channel, where they have target now a CRR for banks for different LD ratios. And that is a clear indication that it's either you are lending to support growth or you keep your money at the Bank of Ghana for no return. And I guess the banks will most definitely choose the former option, really. So good decisions at the end, I believe. You're really supportive of the current trends we are seeing in the economy.
All right. One final question, because I know you have to be somewhere else. So we reported that the average lending rate narrowed to 32.77% in February 2024 from 33.75% in December 2023. So with this announcement by the central bank, we don't expect any significant change in lending rates, do we?
No major changes. I think the APR for different categories of lending, household, SMEs, and corporate is also out, and you can clearly see that, yes, rates may be trending down, but at a slow rate, and it's just mimicking what the GR is doing, and of course the dynamics of the sector. We're still in uncertain times. The operating environment is still not very predictable, and so you look at the dynamics, the aversion is against maybe loans 3 years and more, and so you will see rates maybe trim a bit, but not significantly. And more so when they've maintained the rate at 29. Don't expect major changes.
All right, Courage Buti, thank you so much. Lead researcher at GCB Capital. I appreciate your time with us this afternoon on The Marketplace. Quick financial markets update. Interest rates tumbled to 25.99%, the 12th consecutive week this year. That's according to Treasury bills auction results by the Bank of Ghana. This is in line with most analysts' forecasts. Here's more.
Interest rates continue to fall in line with the disinflation process. The 91-day bill fell by 50 basis points to 25.99%. The yield on the 182-day bill also took a nosedive to 28.49% from the previous week's 28.99%. Similarly, the 364-day bill went down by 50 basis points to 29.09%. Meanwhile, the T-bills auctioned was oversubscribed by 41.15% to the tune of 4.77 billion cedis. The government, however, accepted 4.75 billion cedis. The 91-day bill was the most patronized, with about 2.50 billion cedis tendered. The uptake was about 2.48 billion. The 182-day bill received bids worth 1.34 billion cedis. All were accepted.
All right, welcome back to The Marketplace. We want to turn to power supply issues. The Chamber of Independent Power Generators Ghana, IPPG, has once again descended heavily on the Volta River Authority, calling for an immediate halt to the supply of 200 megawatts of power to neighboring countries. It accused the VRA of selling electricity to the neighboring countries at half the price that Ghanaian consumers, individuals, and businesses pay. Eli Plim Akpatogbo is Chief Executive of the Chamber of Independent Power Generators Ghana. He joins us to tell us a bit more about his concerns. Good afternoon to you. We are just curious to know why you're making this known to the VRA and why you think the government is not prioritizing the taxpayer. All right. It appears that Eli Plim cannot hear us. We are turning to currency market news. We'll be right back. All right, let's head back to our earlier story to do with power supply challenges and the Chamber of Independent Power Generators Ghana descending heavily on the Volta River Authority, calling for the immediate halt to the supply of 200 megawatts of power to neighboring countries. Hopefully, we can hear from Elikplim Akpatobo, who is a Chief Executive Officer of the Chamber. Good afternoon to you. So tell us a bit more about your concerns, why you think the government is not prioritizing the taxpayer.
Good afternoon. We have been experiencing some challenges with regards to power supply in the country. Let me term this as a crisis situation for which we require some sacrifice or crisis management to address the issue. Let me clarify that I'm not against VRA's export business. It is an emerging market to which even we, the IPPs, are interested. But the fact is the sector is governed by regulation, a regulation that I believe applies to the regulated market participants. That is VRA in this case. What I mean to say is that there is a regulation that stipulates that before anyone can export power, there is the need to ensure that we have met the domestic demand. And there is an industry practice that let's create a margin of reserve. In excess of that, we can export. But the fact is, the country has been going through some turbulent times with regards to the supply, and VRA as a state-owned institution should be the first person to prioritize the domestic demand. Should be the first person to sacrifice whatever benefits that they're enjoying from the export market. So this is what we try to challenge, that the Energy Commission should, as a matter of urgency, stop that, so that we can have adequate supply. When the situation normalizes, they can go ahead and do their business.
But how significantly would our power supply challenges be impacted if we are to halt the exports of 200 megawatts of power to our neighboring countries? I mean, how significant would that be?
Let me say that on the face of things, we have 200 megawatts that we see on records, but in effect, there is more that is going into the export market rather than we see on the records. That 200 megawatts can power about 500,000 households on assumption that every household consumes just about 300 kilowatts hour of electricity. If we have that, I think a situation improves a bit rather than what we are experiencing in the country.
Well, 30 seconds because we have to run out of the show. So if I'm just thinking that the situation is beyond our power supply challenges, beyond what we are exporting. So how do we fix the bigger issue, which has to do with power generation?
Most of the power plants that we have, let me speak for the IPPs, that we are all available working, but the fact is that is not enough to meet the required demand locally. So we require this export from VRA to stop to complement whatever is made available.
All right. Elikplim Akpatobo, Chief Executive of the Chamber of Independent Power Generators Ghana. Appreciate your time. More news on our website, myjoyonline.com/business. You can get more on the concerns of the independent power producers. Also, total mobile money transactions hit record 394.2 billion Ghana cedis in 2 months of 2024. myjoyonline.com/business. We'll see you same time tomorrow.